You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
What are some things that you're seeing, maybe from an investor standpoint, as well as a property management standpoint? Any key learnings in the last year or two?
Yeah, I really, one of the things that I've been focusing a lot is not to have a strategy. It's not, pick a strategy and then execute it. I find what's in short supply right now are opportunities. So it's really more about how do you find an opportunity in a property to, purchase under market value, which is much more challenging now than it was, even just a few years ago. So finding a property under market value and then figuring out what the highest and best use of that property is. So, whether it makes sense to do a BRRRR, or whether, you duplex it and then sell it, or use rent to own as your exit strategy. The more kind of tools you have in your tool belt, the more strategies the better equipped you are to look at an opportunity and say, okay, how do I maximize this? How do I get the biggest bang for my buck? It's harder to get mortgages and it's harder to find opportunities. So I want to be able to look at a deal and figure out the maximum return that I can generate from it.
Yeah, so you mentioned that, the highest and best use of the property. And I think for a lot of people, I don't want to say that's a stumbling block, but I think it's something that probably isn't the first thing that comes to mind, because I think a lot of investors, and I'm probably guilty of it too, you go out with a specific point of view, like I'm going to look for a whatever, like rent to own or a BRRRR or a flip, rather than approaching the property. And instead of going with a strategy first, what you're saying is you look at the property and then you say, okay, what's the highest and best use of this property? So how do you make those decisions? Like, what kind of things run through your mind?
That's a great question. It's a little bit, I think, like becoming a professional basketball player. Like, when you're a new investor starting out, you want like a script and you want a plan and you want to, follow all these things because you believe that following these steps, especially ones that other people before you have followed, will make you successful. But I think once you have some experience with real estate and you kind of take a breath and relax, then you can really start to think about, what are the opportunities or the possibilities with this property? What is the market that I'm in? What is in the most demand here? What is the zoning of this property? What are the opportunities? How can I add more? Because in most places, it's cheaper to add a unit than it is to pay for an extra unit. So it's cheaper generally to buy a single family home and add a second unit in the basement than it is to buy two units separately. So I always like to look at it, how can I generate the most income? And it may mean, looking at a property and saying, yeah, I'm going to put a long-term tenant in the basement, but I'm going to Airbnb the upstairs. Or it may be, looking at a single family home and saying, what, the ceilings aren't high enough. There's a lot of things that don't work here for a BRRRR. So I'm just going to turn around and I'm going to do, based on the neighborhood and the market and the square footage and everything, I think a higher end flip would make most sense here. So it really is about sort of collecting all the information that you need and then sitting back and looking at it and saying what makes the most sense.
Yeah, I 100% agree with you, because I think when maybe 3 years ago, on my podcast as an example, or on this podcast when we started it, we were talking about picking a strategy and sticking to that strategy and learning it and perfecting it. And I think that was true and it made sense back in the day. And because the deals are tighter and fewer and further between each other, I don't think that same advice applies anymore. I think it's looking at the deal and like, what can you do with it? And if it's, something different, maybe you have a handful of BRRRR deals, maybe the next one is, like you said, doing short-term, midterm rentals instead of long-term, if that makes sense, or converting it, and maybe adding in a unit in the backyard, or severing the lot or something along those lines, where in the past you might have not done that. Where, you buy maybe a currently done duplex and it cash flowed. Now the strategy needs to be a little bit different because there's a lot more investors, I think, than there even were 5 years ago. And there's also a lot less inventory than there was. So it's just harder to find deals in our market. So that prior advice, I don't think makes sense anymore for the market that we're in today. Thoughts on that? Anything you want to add?
I would agree with it 100%. The way I look at deals now is I break it down into their basic components. How am I acquiring this deal? What am I doing with the property? And how am I exiting? And that's how I tend to look at things now. So if I'm buying from a realtor, if I'm buying a wholesaler, if I have an opportunity to buy privately, I'm always looking to still try and make money in the buy. It's hard with realtors. There's so much competition now for properties. And then I look at, the middle of the deal. How can I generate the maximum return? And sometimes it's literally by looking at the end of the deal and going, you know what, I can sell it with a realtor. I can, list it with a wholesaler, or I can do a rent to own on this. And figuring out which of those levers do I pull? How do those components fit together to create the best deal? And I think it's important, with markets like we've seen in the last few years, they've continued to go up and up and up. And it becomes harder to lose money in markets that are consistently increasing. And I think as investors, we can become complacent with that. And having come through, 2008 and seen what happens when, we get complacent and we start focusing mainly on appreciation and going, negative cash flow from the beginning without a plan to turn that around. I think that it's important that we focus on the fundamentals of every deal and make sure that we're not sort of growing complacent and just counting on appreciation to provide a return for us.
So, I think that's really, really good advice. And you've got a lot of experience. And of the three of us here, we've all been in this game a long time, relatively speaking. It's been a pretty long time.
Yeah.
So I'm thinking now about, the Laurel of 15 years ago, or maybe the Sarah of 15 years ago, or maybe Elizabeth of 15, 20 years ago. And what would you say to one of us 15 or 20 years ago? We're just starting out and we don't have a clue what to do. Because it's easy to say, well, look at a property and assess it. And then we know all these different strategies and we'll use, the highest and best use of the property. But if I'm just starting out, I don't even know what the highest and best use of a property is, let alone choose one, right? Yeah. So what advice do you give to people who are just starting out or maybe just have one or two properties?
I think there's two really fundamental things. One is make sure you know how to analyze a market. Make sure you know what to look for when you're deciding where you're going to invest. Because we're not talking about, buying a pair of shoes and you get it home and you try it on. You're like, this is really too small. Like, it's not going to stretch. I'm not going to wear it in. Like, this is really too small. It's important to know, look at the economies and, look at the employers, look at the average household income, look at the population increase, look at the fundamentals of the market. And I really think that the second thing that's really important is know how to run your numbers properly. If you are looking at multi-unit buildings, don't think that you can just put in 5% for maintenance in, an 80-year-old building and think that that's enough to get by. Those are two things I really suggest that investors, if you have some funds available and you want to educate yourself, make sure that as you're walking away from however you choose to consume information, that you know how to analyze a market and you know how to run solid numbers. And I think that's one thing that you guys focus on with your groups as well, is making sure that people have those fundamental understandings. There's nothing worse than buying a property and actually owning it, and 6 months later you look at the numbers and you go, wow, I thought I was going to have cash flow and I have nothing. I have nothing available for repairs and maintenance, for capital expenses, because I didn't factor any of that in. I think that's probably one of the biggest mistakes we make as investors, is not running true numbers before we decide to move forward.
100% agree. And I think a lot of the numbers on the listings and the listing agents, they pad them up to make, and let's just talk multifamily for a second, they make the NOI, the net operating income, a lot higher than it probably is by decreasing or not showing many expenses that you might want to consider. And you name two of them, capital expenditure costs and maintenance, but there's many others, especially when it comes to multifamily, that you're like, where did they even put vacancy? Where is there even anything for property management? And so a lot of the time you're looking at an asset and they're basing, the price on the net operating income and the cap rate, but the net operating income could be a third less if you really do the math. So don't take everything for face value. And I can tell you that's probably 90% of the time, those numbers are not accurate when you see them on the MLS. So do your due diligence.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.